All right, hey, yo, yo, yo. Hey, YouTube, how you doing? It's time for Forex.Today. There's 21,000 of us. We're about to jump in and cover gold, oil, Bitcoin, dollars, stock market, and a whole bunch of other things. Let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's get an update on the headlines.
Euro, US dollar price forecast. US dollar consolidates Powell-inspired losses.
U.S. stocks may give back ground after last Friday's rally.
Wall Street poised to open in negative territory. Pi Network price forecast. Bearish potential sparks amid large wallet transfer. Euro, Swiss franc retreats as Swiss employment data lifts franc strength.
Fitch maintains India's sovereign ratings at BBB.
United States Chicago Fed National Activity Index fell from previous 0.1 to 0.19 in July. Hyperliquid price. Forecast. Hype offers recovery signals backed by steady open interest.
Kevin Hassett. The press feels it would be great if he could build a sovereign wealth fund.
The US dollar is mostly higher to kickstart the new trading day week.
So it seems like having listened to all the headline news that's coming over the last few minutes, it seems like it's leaning heavily towards risk off this morning, huh? Well, let's take a look and see if that is actually the case. Is that actually true? So let's go and do our fundamental analysis of macroeconomic data. And there's a lot that we can cover. I think what I'll show you is all the basics, and maybe you want to go a little more advanced. Yeah, we'll see. All right, so how do you feel? How does the market feel? Do you understand what the market is doing? Are you going to align with it or trade against it? These are some big questions. Well, let's take a look at what the market is actually doing. Let me zoom back in. I know I just zoomed out, but there we go. So Bitcoin down. Yeah, well, it was closer to 110 not long ago, so only down 2.7%. Yeah. Dollar below 98, S&P 500 had a monster day on Friday, up, way up. Gold 3,400. Oil, what we got down to 62 maybe on Thursday or Friday, but now we're up to 64 to the top end of our current range. And Treasury notes, what? Yields are back up. Well, we were at 4.3, 4.4. So, hey, 4.28 is okay, but going in the wrong direction today. I've already covered at the TRADARS live stream, traders.com. I've already done the scatter plot and a whole bunch of other things. But that's our macro situation with the slight lean toward risk on. Here's our hit list, things we want to buy, and here's the hit list of things we want to sell. Some congruency here shows some CAD weakness, which is interesting. But one of the things I wanted to show you is the risk gauges that we use. And yeah, well, guess what? They're mixed, but not in the sense of mixed in direction, but mixed in time frames. But if we take a look at what's happened over the last last month of trading. Volatility is up a little bit, but not much. S&P 500 is up a little bit, but that's okay. Treasury yields are down a little bit, and that's okay. Dollar hasn't done anything. Up, down. Nope. nope. It's been sideways for the last month. And so that scores a 0. Gold is up a bit, and I have that as negative. Yen, flat for the entire month. Short-term treasury yields are down, and that's great. And the put-call ratio is down, which favors bullishness. So that's where we are, slightly bullish. And this is based on Friday. So we're not quite there, but it's a pretty good start. Today might be capitulation day. I don't know. We'll see. So you trading euro dollar? You like the euro dollar? You're like, Wayne, I love euro dollar. You do? Wayne, it's my favorite. It is? Yeah, I always chuckle at traders that just trade the same thing over and over and over again. Instead of lining up something pretty basic in Forex is the concept of strong versus weak. So by definition, could euro dollar always be the perfect combination of strong versus weak? No. No, of course not. That doesn't make sense. And so that's what we should do. Now, TRADARS makes that easy, but today we're only going to do euro dollar. Maybe you should consider using the TRADARS platform. But let's get on with it. Euro dollar, we're going to look for continuation patterns. We're going to look for consolidation patterns. We're going to look for reversal patterns. We're going to look on a 15-minute, 30-minute, hourly, 4-hour, and daily chart. The idea here is you try to line up your technicals, and this is pattern recognition, so it's on the technical side, with your fundamental bias. So I don't know if you're a bull or a bear, but we need to see, well, what patterns actually exist, right? And guess what? Look, I'll show you. Euro dollar is selected, and we're looking at continuation patterns, consolidating patterns, and reversal patterns. And I can tell you in 1 second, nothing exists. There's no reliable, repeatable pattern. So be very careful on what you do on euro dollar right now. What do you think about crypto going through the same process, consolidation patterns, reversal patterns? Well, you should know fundamentally what your bias is. Are you a bull or a bear? Technicals should never answer that question because it's only price time data. It doesn't tell you why things are moving. That's what fundamentals is. So anyway, so let's say, for example, I wouldn't mind buying a dip on Bitcoin. Sure. Okay, so now the rationale here is if I was interested at some point, at some time, and at some price of buying Bitcoin, are the market conditions favorable for that? Do we have a new bullish signal, if you will, a new bullish pattern on any time? Let's take a look. Nope. Just like that. See, those are deep, complex questions. It takes 1 second to answer that. So having to look at all those different time frames for all those potential patterns, there are no bullish patterns right now at all, not even on a 15-minute chart. And in fact, according to this Bitcoin 4-hour pattern, the down channel suggests that we can get down to 105. Cool. Which is fine by me because I'd like to buy it closer to 100 than 110. So if it's going to fall to 105 and maybe even lower, sweet. So it doesn't change the fact I might want to buy it. I just don't want to buy it right now at this price. Not with that pattern and no other pattern. Now, we care about the 10-year T-note because we care about yields, and this is one way to measure the likelihood of the Fed cutting interest rates or not. We can look at what's happening in the Treasury market. So we want to look at price. And so just like anything else, we want to look for trending or consolidation or reversal patterns on all 5 time frames. And right now, on the 10-year T-note, guess what? This has rising prices, slightly. It's definitely not bearish. So prices are rising slightly, which is good because that's lowering the yield. Now, what that sort of implies is that if people think the Fed is going to cut interest rates in September, then at that point, what'll happen is the 10-year T-note will pay less, and therefore the current ones would be worth more. So this 10-year T-note is going up in value because the future one will be paying you less income. This one will be paying you more income. And so that's good. And therefore, it's rising and lowering the yield. So I would put that in my cap and say, you know what, that leans toward risk on for today. But we're looking at all these constituencies, just like looking at that risk gauge looks at volatility in the stock market, the options market, and the treasury market, and all that kind of stuff. We're looking at yields. Well, we're breaking this down in a very similar fashion by looking at the technical charts, not just the fundamental numbers, right? So gold, you like gold? Well, fundamentally, TRADARS is bullish. Okay, fine. So the thing is are the charts bullish? What if the charts are bearish, but you're a fundamental bull, or vice versa? I'll tell you what, we're in that situation where fundamentally we might be a bull, but there are no bullish trade plans on the 15-minute, 30-minute, hour, 4-hour. And in fact, if you look on the daily chart, it's consolidation, non-directional, not up, not down. It's just consolidating. So that doesn't confirm, doesn't really deny your bullish bias, but it can't confirm it either. So you might have the right idea, it's just not the right time. Golly gee whiz, you see how fast it is to do the analysis? Yeah. Yeah, see, the thing with TRADARS is it's going to save you a whole bunch of time. Yeah, you can make more money, but you can't make more time. So you got to make money and save time. Okay? So what's going on in the S&P 500 right now? You want to take a look? Of course you want to take a look. Nothing. Yeah, nothing. Let's just double check we got that right, because you're like, really? Well, we're looking at the S&P 500 right there. I have it activated. And in fact, let's turn on key levels, which is support and resistance. Okay, and breakouts and fundamental spikes. We'll just say, okay, show us everything on the S&P 500. All right, well, on the hourly chart, we've dropped back to an old support line. That's it. That's it. So, kind of like we said, if we were only interested in trends, up trends, down trends, or sideways trends, because we want to know if there's consolidation or not, or if those trends are reversing, we want to know that stuff. But stuck in the mud, this is like, yeah, nothing's really happening. Cool. Then maybe sit on your hands for a little while. Trading now looks like has a higher probability of losing money than making money. Aha. That makes sense. Yeah. Cool. So before we go, let's look at the calendar for the rest of the week. And we'll filter the calendar by only events that produce volatility and, oh, I think I'm on the wrong page. Let's go to the sentiment. And not just volatility, but a reliable, repeatable pattern inside that volatility. And tomorrow at 8:30, we have durable goods. Okay, and we have all the data. It's a mixed it's a mixed opportunity. Then on Thursday, we skip. Nothing today, a little one on tomorrow, which is mediocre. Nothing on Wednesday, except maybe NVIDIA, but that's not an eco release. Then GDP on Thursday, but also at the same time, we get the weekly claims. And we have all that data over here in the fundamental section. And then Friday, a bunch of European crap. Canadian GDP. Yeah. We'll find out that Canada is not just not productive, but unproductive. People go to work and undo what they did the day before. Is GDP going to be negative there? Well, we'll find out. But, having this data makes it very easy to do your analysis. So we can see GDP is actually a pretty good trading event, right? On Thursday, it's actually a good one. You can see all the currency pairs tend to move if less than expected. All tend to move if greater than expected. All tend to move if they come out as expected. So guess what? This sucker's going to move. And then you can go through and analyze and say, well, if it's less than expected, what has happened in the past? For euro dollar, I'll just pick on one. And I'll say, okay, show me every situation where it came out less than expected. And there's the history, so you can see the size and direction and timing of these events. And yes, that means we've stored in our databases the candlesticks for every useful economic event. We have the charts 2 hours before and 2 hours after for every dollar pair, for every economic event, right? And then we break it down to how the news came out. And then we organize it by percentage of these instances in which they move up or down, or even sideways, for everything on the calendar, and have the charts before and after. You understand the millions of data points that would require? Yeah, you're welcome. So cool. Maybe you want to swing on by traders.com. We use Traders Way as our execution partner. Yeah, unless you're in the US, but swing on by. If you trade through us, TRADARS becomes cheap, even free in some cases. And you get a spread rebate. Wait, what? Yeah. So you trade, right? You trade with TRADARS. Guess what? At the very least, your spread gets a little bit more narrow because we give you a rebate. Well, that ain't bad. No, actually, it's beautiful. Yeah. Beautiful. It's true. I will see you later today. Members of TRADARS, don't forget, we're going to meet at 4 o'clock. Okay, today at 4 o'clock. Then we're going to meet again tomorrow morning. Cool. And I did do a meeting on Sunday. You see that? On Sunday. And we downloaded and read all the major economic reports from last week so that we were hot to go HOTTOGO here on Monday morning. Better than a cold start, I'll tell you that. Hey, that